koma nyumba ulinayo yotuyabira mubusa ulindi masheo ulindi mpando ukhala politi zose zoyenera. It means owerengeza utenga mwina 200,000 ndikagule inventory as we have already talked about. Ndikagule kama so much and whatever. Then kuzaita muntu owerengera zose zija nyumba pamene ukhala paja zija mwashola kose zija kenaka amount makulu. Fine. So liabilities are also equity. Why? Some will answer. Why? Some will answer. Liabilities can be part of equity, part of capital. Come again. Liabilities are unanini sana. Gongoli. Chifukwa chani liabilities tikuwaita ngati ku capital chikewa ndiyo maya kumachimuliki. Yes, other people start with Ngongole, but it's not every liability that can be put to equity. Whenever it is more than one, how many months? It's nothing there. But in that, Ngongole, you need an example after 1 year, that is put to equity. But if it is less than that, it's put that inventory. Put if you are going to sell and you are going to realize a revenue. Ikangopita 12 months chini kupitisha capital. Kama Ngongole zina ukatenga pana uzabweza pia kuyambalisha mpaka over 8 years that yes. But when it is before that or even less than that, no, should not be put there. Should go to profit and loss. Sure. So we are saying that we are preparing or reporting or presenting the financial statement. So, what are we looking into? We are looking into presentation of financial statements based on position, financial position. I wish you had computers, yes, academy. Academy stage, yeah, it's so yes, that's one of them. But market is a bit of so let us propose return any grounds what we are going to enter. maybe you repeat it that Taliban then I should be mentioning the I'm doing but I'm putting it over. So next one is the return earnings. Return earnings. Return earnings, that is the amount is the 243,500 for the 2021, 243,500, and then the 2022 161,700. 2022 161,700. On the same below, you are supposed to write other components of equity. Other components of equity. Then you have the total for that is the 903,700 and 782,900. 903,700 and then 782,900. Don't close, and then have non-controlling interest. Non-controlling interest. Non-controlling interest. 2021 is the 70,050. 70,050. 70050. And then 2022 is 48,600. 48,600. Then you write total equity. Total equity, you add that is the 973,750 for 2021. Total equity is 973,750. In 2022, the total is 831,500. 831,500. Then we have non-current liabilities. Non-current liabilities. Non-current liabilities. Below non-current liabilities, we have long-term borrowing. Long-term borrowings. Long-term borrowings in 2021 is 120,000. 120,000. In 2022, 160,000 on long-term borrowing under non-current liabilities. Then below long-term borrowings, it is deferred tax. Deferred tax. Deferred tax, we have 28,800. 28,800. And then we have 26 in 2022, 26, 040. 26, 040. Then below deferred tax, we have long-term provisions. Long-term provisions. Long-term provisions is 28,850. 28,850. Long-term provisions in 2021, 28,850. In 2022, 52,240. In 2022, 52,240. Then we have the total non-current assets. Total non-current assets. Sorry, total non-current liabilities. Total non-current liabilities is the 117,650. 117,650. Total of non-current liabilities, 117,650. In 2022, 238,280. 238,280. Then we have current liability. Current liability. Current liability. Current liabilities below we have trade and other payables. Trade and other payables. Trade and other payables, which is 115,100. 115,100. That is in 2021. In 2022, 187,620. 187,620. Then below trade and other payables, we have short-term borrowings. Short-term borrowings. Then we have 150,000 in 2021. 150,000 in 2021. And then 200,000 in 2022. Below short-term borrowing, we have current position of long-term borrowing. Current position of long-term borrowing. Whereby we have 10,000 in 2021 and 20,000 in 2022. Current tax payable. Current tax payable is the 35,000 and then 42,000. 35 in 2021, 42,000 in 2022. Then we have below current tax payable, we have short-term provision. Current tax payable in 2021, 35,000. In 2022, 42,000. Then we have short-term provisions below current tax payable. In 2021 is 5,000. 2022, 4,800. Then now we add total current liabilities. It means we are going to add those figures, which is about 315,100 in 2021. 315,100. In 2022, 454,420. That is the total for current assets. Liabilities made another one for me. Then we are supposed to add the whole total liability from 9 current liabilities. It means we are going to add 117 plus 315, which is 492,750. 492,750. And then we are going to add the same with this other year, which is the 692,700. 692,700. Then total equity and liabilities. It means we are going to add this figure with the upper figure that is the for the liabilities. So we add with the upper one, which is the 14,665,500, 14,665,500, 15, 2022, 15, 24, 200. 200. So if we compare the figures of this year and the other year, the totals are the same, is it? For the total assets and then total liability, equity and liability. Simaona pamoja sana. Usaona pamoja sana. Maona unafanana. That's what I want to say. Total assets tani na 1466. Sio? Tunaelewa total assets. Kama total liability, equity and liability is the same total. Maona? Nifuna kama beto.
Sinamalizisha. Wewe.
You want to know it? What do you need then? The church was 154, 200. 154, 200. Then Mapetos, 154, 200. This is an example I wanted us to understand how it is written, okay? Comparison of the what? Of us, the work we're going to do. This is when we're looking into financial position at December 2022. Okay? So it means we are going to compare. And so forth. But if we go, this is only the total assets. Then we have again the total equity and liabilities down the total equity that is what needed. So we just wanted to have a simple example whereby how do they compare with the other years. For example, if we go to the assets, maybe it's a very good example here. If we compare assets, total assets is that, is it? Total assets, that and that. But if we go inside the cash and cash equivalent, in this year, the first year 2021 and 2022, it wasn't the same, is it? It means this time it was what? It was more. So we can just have a simple example how they calculate. We can say so what is the difference between 200 minus 400? Is it? I've said that taken 1 from here to here, 12 from 4, 8, is it? Good. Here was 1, taken 1 here, 2 from 11 is what? 9. Then 1 from 1, it's 9,800. It means it had gone up by 9,800, is it? So you can say that the position for maybe cash equivalent in 2022 has gone up. Okay. Even when we can take the goodwill didn't change, it was the same, and goodwill but not, unless there's other things that can be there. But if we can take something that decreased, was which one? This other current asset. Have you seen? This is 25, but this is 12. So there you can see that it has gone down. You can report on that to say, but the other current assets went down. Okay. You can even calculate based on percentage. We have those tools that are ratio and so on. You can use one of them and then you report on that. Always, when we are reporting, you cannot report when you don't have the 2 years comparing them. Which other thing that went down? Which other thing in the example that went down? Inventories, is it? Inventories went down also. So these are some of the things that we can talk about when you have prepared something like that. Any questions? I mean, and USB. USB? Yeah. I should give you a book. You see that? When I book. When I phone, you see. Don't I have it? So the book can I have. Also, 통보에 내가 보는 거거든. 나만 보는 from the way reporting, financial reporting. Yeah, financial reporting. Let me check first because I've got other books that are also financial reporting. Come again? Let me just check financial reporting. Financial reporting. this one. So now I get Bokaro Bukina. Oh, this picture is okay. Let me go back to financial reporting. I think it says in the book. So I'll just send it on the group, is it? But the last time we said to my friend, that's when you can understand what was Zimbabwe. Do you know that? No, sir. That means right? It's going to come, it's downloading. Okay, so that book, you just have to go on page, and if it can be possible, when you want to have a simple example, everybody should have his book, and then we can explain better. So I've given you the book, and then that's that. So they are telling us that when we are talking about a statement of financial position, we can talk about, let's say, property, plant and equipment, investment property. Of course, these have been stipulated in particular chapters where you can read and understand intangible assets, financial assets, investment accounted for using the equity method. There are so many things there that you are going to see that shows the effects of the statement of financial position. So this was just an example for you to understand well how we report. It would have been very difficult for me to explain without showing the example to you. To say, yes, we compare, but when we look into particular figures, that's when we can really understand to say, it's not always that the entries can be the same or can be more, but sometimes it can be less. So that is what you as the reporters are supposed to know. So that is what we do, and on the information presented either on the face of the statement of financial position or by a note you can show in the the reporting. And we have seen the explanation about what we have presented on it so that you can better understand when we are talking about the reporting. Any questions, briefly? No, but when you read, you can understand when we mean, what we mean when we're talking about the reporting. So next time we just have to go and look into the statement of comprehensive income, because that we have seen the position and a statement of financial position, and then we are going to look into the statement of comprehensive income. The former and the other. Because you have the book now, it will be easy that you will just be going over and then look at the formats that are there when we want to present or when we want to do something in connection or whatever we want to report on. So that is how we do it. So assignment, one person, no person assignment? One person? Thank you, Pastor. But I want to give you maybe something that should come and talk about next meeting, because you have the book now. Next meeting, please, everybody is going to tell me about these questions. You come and present to say, this is what I've found out. Okay? 1. What is statement of financial condition? What is statement of financial position? You can go and Google, see in the book, or you can do that. And then what is an asset to? What is an asset? Three, what is a liability? We have to be using the library as well. We have online books. Also, go into the library about that, and so that you should come and present, and for us to later understand when we are talking about that. How about what is share capital? What is share capital? The last one. The last one. What are reserves? What are reserves? Reserves. R-E-S-E-R-V-E-S. Reserves. So next meeting, we're not going to start a class unless you tell us what I've told you, then we'll start continuing. Yeah. You have to be close to it. Monday, email, I have no problem. Come she was another big office in I'm an enough demand is for my meeting. Come, I don't you were a little Macau. Then, no command, they don't have it.
Remember one.
No, let's try next month. So, you said we are going to have a class there. If I don't have any meeting, I'll say please come. Thank you. Thank you. Come and wipe the board, please. No. You're not supposed to leave the board there. Just sit and begin. Yeah. So, who could have a good one?